But the other space that we have been tracking today is the IT sector. So tech giants like Wipro and TCS have decided to hold the variable pay for some of the employees, which can result in a rise in attrition rates in the near term, but can also support the margins as far as a longer term is concerned. I think we have with us a guest on the show to make sense as to what this really means for the IT companies. Mr. Omkar Tanksale, the Senior Research Analyst at Axis Securities, is with us. Omkar, hi, good afternoon. Thank you so much for making time and speaking with us. First up, how should we read into this entire delay in the variable payout? Because of course it's not a problem of working capital or cash crunch with these IT companies. Why do you think is this happening, and how should we read into this?
Yes, firstly, thanks for the opportunity, and I'll try to decode this in this way that they have cut the variable pays. I mean, for the delay, the variable pays for mid to senior levels. That is mainly because to adjust the employee pyramids and the cost that has been the supply side cost pressures that was putting onto the margins on the IT companies side. So it's more on the balancing out to the EBITDA part, which likely to strengthen back into the demand. But in my opinion, one should also consider that there might be a slowing down the demand for the IT specialist or mid to senior level consultant, which also an one indicator of there might be a cut or there might be a pressures from the IT spending from the North American or world largest economies of the world, which may on ongoing pressures, which may put the pressures on the growth momentum in the coming quarters for these companies. So in my view, the first more impact from the IT services, the measures that they have taken to balance out the operating margins, which are under pressure due to supply side constraints and the better demand, plateauing out the demand scenario and the attrition level that they have facing, because they know that there might be an pressure on the economic side. But on the revenue side, I feel it's more point of or concerns about the slowing down the growth momentum or the demand scenario going ahead.
Right. These companies are cash rich. I'm sure there's absolutely no issue of, payment or how things are moving in. But of course, things can move ahead. What do you make of this entire, last year where they were ready to pay anything for anyone to join, and now, when they're saying that they would delay the variable pay? What sort of analogy does it tell you, and what does it mean for the next couple of quarters?
For the next couple of quarters, one should see the commentary from the client spending, and spending will likely on a vertical basis, because there might be an issue for the slowing down on a cut on discretionary spends from the various sectors like manufacturing or BFSI because of the potential threat to economic slowdown. If there is a cut in the budgets from these, because in the month of December they are likely to put their IT budget, and if there is a cut in the spends, the demand will likely to be slowing down, which might IT companies balance it out with the attrition levels and employee retention that they have. We might face for the Indian IT services might face an slowdown or cutting down the employee wages or variable pays going out to balance out the margins for that. But if 1 year ago it wasn't, the demand was mainly robust, and there was a huge demand for the vertical special employees and technology specific employees, so there was paying a huge. Now it might be also an indicator of slowing down. So for the next couple of quarters, one should see an spending from the vertical specialist or vertical specific commentaries.
Sure, but Omkar, since you're talking about vertical specific commentaries, wanted your take regarding BFSI as well, because that has been slowing down and forms almost 30% of the revenue for these companies. And also wanted to understand from you, does the downgrade cycle really continue for the IT sector? Do you think worst is factored in? How do you see the EPS estimates moving going forward?
See, I don't see and consider the huge impacts on IT services companies as a whole. It might happen that if the budgets are getting cut, the new ramp up will likely to be delayed. But I think it's more on the solidity business. It's continuous and ongoing for the multi years, because services they have providing as a basic largely on the tertiary, and they have the large dependence on these services kind of a services companies, because of the vertical span and because of the automation that they have cultivated on their particular processes. So there might be a slowdown in the growth, and the margins may impact, but I don't think large correction in the revenue side. So and on the pricing side or evaluation side, the cut has already been. We have seen all the parts have been already factored in. You can also consider and 35% of the valuation correction from the large or the on the top, and now they are against trading at 28, 20, 26 P multiples. So
So
all
got the
these are
point. Yeah, so got the point. I just wanted to understand in the mid-cap space, I mean, no longer some of them are mid-caps. I mean, the market cap itself is high, revenue itself has become so high. What would be your pecking order in terms of stocks that you like?
My picking order is firstly on the mid cap side, I like Persistent. Secondly, on a Mindtree, and thirdly on a LTI.
Thanks so much, sir, for taking out time for us. Always good to get perspective. As we speak, Nifty has recovered about 30 odd points from the day's lowest point, closer to 17,600 level now. Taking a break. Stay tuned. Lots more lined up on the other side.